Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So it's time to get started with our morning analysis, and we're going to get through all of our majors today. Like I said, today's the marquee event of the week for U.S. data. I mean, everybody's waiting around for retail sales. Like I said, the volatility that we've seen this week has been crazy. And then I did not expect that the least bit. All right, anyway, let's go over to the euro dollar. Let's start there. So, if you guys missed my comments from yesterday, I'm short the euro dollar, and I shorted it at, let's see, my cost average is at 113.29 from yesterday. I thought it was 113.30, but I short. And just so I'm going to be very clear here, I was short 113 yesterday. This is 24 hours ago, so I was short yesterday at 113. Then the news that would be a possible deal extension with Greece. Excuse me. The euro popped up to 113.60, and when it came down back to the 30s, I covered my euro short, and I took a 30 pip loss. And then I thought about it, and I said, that's stupid. Why would I do that? And I just reshorted it. So basically, I took a little loss, but I shorted it at a higher price, basically at the same price. And so I'm short the euro now, just at the 13.30. I'm going to hold it through retail sales. I'm not. It's a small position. It's not a full-size position. I'm very adamant about not trading the euro in a full-size position right now, with this Greece news lingering around. And like I said, post jobs report, I'm hoping to close it out for a nice profit, or I'll just close it out at break even, is what it looks like. Okay. So anyway, the euro dollar really, I think, has very critical resistance here, as long as it's below 114, 113.80. Okay. Now we're setting up quite possibly a double top in the future. That's if we break this neckline, which would be interesting, because that would suggest that while we're in this consolidation, if we break through this neckline, that double top should lead us down here to 107. But it's hard to see that happening ahead of next week. Anyway, we do have this double top that's kind of forming. We have really critical support that we're coming into here, and I don't know what that's at. Why is that there? But okay. So you can see really key support is going to be coming in right around here, and let's go ahead and figure out if that's a fib. Low to high, 50%. That low right there comes in at 112.13. 112.16 is a 50%. So really 112, let's just call it 112.10 key support. 112.10. That's going to be good support for today. That's why I put an asterisk there, because I think it'll be pretty significant. If we break that, then that's going to open the door all the way back down to 111, sub 111, okay? If that breaks. I mean, we'd have to have in order to get down there, we'd have to have a really strong retail sales number. Like the market's expecting 1.1%, and we'd have to do close to 2%. Then I could actually see the euro, over the next 24 hours pushing down towards 111. But that's a really lofty expectation. I actually expect retail sales to come somewhere in line towards expectations, 1%, maybe a little higher than that, 1.3, 1.4%. But anyway, on a weak piece of data, though, we're going right back to 113.50, and then really key resistance at 113.85. So 113.50, 113.85, and that is key resistance up there. We are in a range trading environment right now with the euro. Okay. Again, my expectations just ahead of next week's FOMC. Either we're going to do this, and then we're going to come down, or we're going to do this, and then go back up. But regardless, we're going to probably end up being right around here midweek next week as we prepare for the FOMC. I don't see anything really breaking us out of this range. I may be wrong, but maybe a deal with Greece and its creditors pushes us up above 114, perhaps. But I really feel that the market is intently waiting for guidance from the Fed, knowing, having a better understanding of when the Fed's going to make a move. Okay. All right, let's go over to the cable. So here's the pound. I am short the pound dollar. I shorted it yesterday at 114.80 or 154, excuse me, 82. Okay, 154.82 is my cost average. We rallied to the 618 yesterday, which is 155.70. If you guys remember when I shorted it, I said I'm going to risk above 155.70 because that's the 618, and that's all it went to. I mean, it basically went to 155.53. So key resistance is going to be 155.70. No if and or buts about it, but you can see why we're being supported here. Very, very easy to read at the moment. As far as what we're respecting, and if the cable breaks through this support, my assumption is we're going to see this 153 again, which will be something like this as we start to build our own consolidation ahead of the FOMC. Okay, so today's support is going to be the lows today, which will be at 154.30. And then resistance 155.70, and that is key resistance, and we are range bound. Let's go to the Swissy. Now, some sort of Greek deal, if there's going to be a trade, it's going to be right here. Okay. On a deal with Greece and its creditors, I'm looking to buy the dollar Swiss and the euro Swiss, because then, if let's just say what Steve from Greece, what he said, happens. If that is the case, hold on, let me see something. Okay. If that's the case, then what's going to happen is you're going to see a lot of people sell Swiss francs because they're like, well, I don't want to hold because you don't want to hold Swiss francs for an extended period of time because you're paying interest to the Swiss National Bank on negative deposits. Anything that you're holding there in size, if you're a bank or an institution, you're paying interest on it. That's where you have the negative interest rates. So if you know that, okay, Greece got the next 9 months of no problems, I don't want to own Swiss francs for 9 months because I'm going to have to pay interest on that. I just don't want to do it. So you're going to automatically sell Swiss and buy other things, buy the euro, buy the dollar, buy the pound, buy whatever. So any Swiss pair, euro Swiss, dollar Swiss, pound Swiss, that's going to be a good, short Swiss buy at the cross rate. Okay, so just remember that, because when a deal is reached, let's just hope one is, when a deal is reached, you want to sell Swiss francs and buy something else. My weapon of choice will probably be buying the dollar Swiss right here. Okay, nice downtrend line. We take out 94 cents, and it'll probably be a nice rally. That's not right now. That's not today. Because if you're buying it right now, you're just assuming, okay? You're just assuming things get done, okay? But realistically, for today, 94, well, The 618 is, it comes in at 94 cents, and then support's going to be right back down here at 93. Well, probably lower than that. Let's go over to an hourly chart. I'm going to write in 94 cents because even on a strong retail sales number, it's probably going to find resistance up there. And I'm not interested in buying the Swiss franc right now, or buying the dollar Swiss rather. But when a deal gets done in Greece, when or if, I will be that will be interested, or I'll be interested in the Swiss pairs again. Let's see. Let me see if I can go over to the support here. Let's figure out where that's at. Okay, so support for the dollar Swiss will be right through here, I suspect. Let's get rid of this. 93.15. All right, let's go to the dollar yen. I am so happy I closed out on my dollar yen short yesterday. I can't even tell you how happy I am. I closed out on my dollar yen short right here. Like right here. 122.60 something. 65, 69, 67. Glad I did that. We are obviously up against key resistance today. And I'll tell you guys, if we have a strong retail sales number, it's going to break higher. Okay, check this out. Really, really key resistance coming into play. I'd say 124. Okay. 124. We're out of our bullish trend because of this week's price action. And support on a bad number. I mean, I would think it's right here, because you can see how the bodies were holding below. Even though the wicks were there, the bodies were holding below. It's one of these two places going to offer really good support. I mean, this is like more of a buy zone, if you will. So I'm just going to write down 123.20, but the dollar yen should be supported, you know, because if the retail sales is a miss, I don't think it's going to be too big of a miss. I really don't. The American consumer, I always say this, it's really tough to bet against the American consumer. It really is. We Americans spend, and we're making more money now, which means we're going to spend every last bit of it. You know, Americans are notorious for not saving too well. I'm talking about the general population. Like one of the stories I always like to tell is it was my 20-year high school reunion, and we were in the middle of the housing crisis, right? The financial crisis. It was um, my 20-year high school reunion. I was living in Dallas, and I flew back to Phoenix, where I'm at now. Flew back to Phoenix, Arizona, and Arizona is going through this like literally like housing depression. I mean, everybody's foreclosing. They're they're just walking away. That was like, you remember those articles back then where there was just these streets with you know that were just emptied out, dusty streets with these homes that were just shells, and people had walked away, and all this stuff. The huge housing crisis Phoenix felt. And I was at, it was our reunion, and we went to this, the before the reunion itself, we went to a mall that was, real close to, like, where the housing crisis was really hitting. A lot of foreclosures and a lot of tumbleweeds in the street and all that crap. But we're at this really nice mall, and we go to like PF Chang's or whatever the nice restaurant is, and there was like 50 of us having dinner, right? And it was, I remember looking at the mall, and all there was is just people shopping and people buying just crap. I mean, everybody's walking around with shopping bags and spending money. I'm like, where are people getting all this money? And they're like, well, everybody that lived there, they're like, well, people aren't paying their mortgage, but they're still shopping. It's like they didn't pay their mortgage. So like you have a $2,000, let's just say you have a $2,000 mortgage. They're just taking that $2,000 and they're spending it on jeans and, you know, and, and shirts and iPhones and all this crap. It's like, wow, you're not going to pay your mortgage, but yet you're going to spend your money. And that's when I truly realized you never bet against the American consumer. You just don't do it. It was just ridiculous. I'm like, how is this even possible? But anyway, that's a little story I always like to tell because it's so true. I was so set back. I'm like, how is it that you guys are foreclosing on your homes, yet you're still buying blue jeans for $150 a pop? It just didn't make any logical sense. But the American consumer doesn't make logical sense at times. All right, here's the Canadian. So the Canadian is a big deal, guys. The Canadian, first of all, the reason why this is a big deal, and let me remove this stuff. So if you take a step back, the Canadian had a double top and a extension that should have reached 121.60, which, by the way, I was just salivating, waiting for an opportunity to buy it down here. Salivating. I'm like, please, please let the dollar Canadian get to 161 or 121.60 because I want to be a buyer. I was just waiting for it. I'm like, come on, do it. What we did, we stopped short, and now we're reversing. Why is this a big deal? Because there's a lot of people that are short the dollar Canadian right now that are looking at the dollar Canadian going, why in God's name is the dollar Canadian going higher right now? Now, I know it's because crude oil is falling and all that stuff, but I'm thinking at this point that this Canadian is going to start squeezing big time because there's a lot of people that are shorted that was expecting so much more that they're going to turn around, they're going to get squeezed. Wow, look at the euro. Wait, hold on really quick. Buns are ripping. Listen, guys, if buns are ripping higher, guess what the euro is going to do? And why has my light wave stopped? Damn it. I have to open that up later, but that's all right. Yes, sir. The euro is falling and the dollar is rallying. So watch the Canadian, especially if we get back to 123.60. Okay, 123.60 is going to be key resistance. Dips should be pretty well supported now at 122.80 because if you imagine this back testing, any back test now to 122.85 is going to be supported. We are in a range, unfortunately. Kiwi. So I guess it's safe we can do this. It's been one of our only currency pairs that has been bearish nonstop. Okay, here's the Kiwi, new lows. You have to imagine the people now are like, if it can just rally back to 70 and a 70 30, I mean, how many people are aching to sell it on a move back to 70.30? If we have a strong retail sales number, the question is where are we going to go from here? Okay. Now I've already removed them, but I need to put them back on. So let's figure out where our extensions are. From this low to that high, we're at 127 extension right now at basically 70. We break below this. Hold on. Where does that come in at? So 68.55. Oh, that's a 50% retracement from 2009 low to 2011 high. 68.55. All right, I'll write down 69 cents as support next. I mean, we got to start looking at round numbers now that we're flying through here. So, um, yeah, I mean, really, there's no support for a while. There really isn't. Okay, when I come back, we'll finish up with the Aussie, the dollar index. We'll take a look at the peso, yada yada yada, uh, Swedish krona, Norwegian krona, all that fun stuff. I'll be back in a few moments. Don't go anywhere. Thanks everybody for being here. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Let's go, and just so you guys are seeing, the euro slipped to 112.40. Cables down at 154.50. Kiwis sitting below 70 cents, and the Aussie's trading pretty heavy as well. We got to take a look at the Aussie dollar because the Aussie had blowout numbers last night. All right, a little bit high on the in the part-time work. I think part-time they created like 27,000 jobs or 30-some thousand jobs, but still, they created 40,000 jobs, and unemployment rate dropped to 6% versus 6.2% expected. Okay, um, the thing about the Aussie is I'm surprised that the Aussie didn't hold any, any of its gains despite the weakness in the Kiwi. I was really surprised we did not hold this move. Very, very surprised. Okay. Even on the spike higher overnight, we didn't hold above 77.85, which, I mean, you have to imagine there was people that got caught long here. There's probably shorts that got squeezed out right here. So today, 77, and let me get rid of all this stuff. I just want to remove a lot of this stuff really quick. Okay. Let's get rid of this fib too, because it stalled at 786. Okay. So that's 77.85, really, really key resistance today. 77.85. Now, people are just dreaming right now of getting out of the Aussie long up there. Okay. I'm sure there's people that are just dreaming, oh my God, if I can get out of the Aussie long up here, that'd be wonderful. The problem that you got now is you're now at risk of breaking lower because going exactly opposite of what people would have believed. If you were sitting there going, all right, I'm long the Aussie because, come on, we had some really good numbers out of Australia last night. I mean, how many people are going to say, well, screw it, get me out of this thing. I don't want to be long anymore. At what point do they pull the plug? Because I'm assuming it's got to be soon. I would think. I don't, and aside from I mean, I have the Aussie New Zealand long. I don't have the Aussie anything else long. I'm not trading the Aussie dollar. I've been avoiding the Aussie dollar kind of like the plague the last couple of weeks, and I'm glad to have been doing so. But at what point do you go, okay, I'm long the Aussie. I got a great jobs number yesterday, and it's going down. I have to get out. Okay. I would assume that number probably is around 70 cents. So, or 77, excuse me. If we break 77 cents, that's going to be bearish. That's going to, that's when you start going, the Aussie is doing the unthinkable. Like, I had no idea it would do that. All right, let's take a look at the dollar index. Okay. So the dollar index, let's zoom in. Wrong way. Zoom out, I meant. Okay. So the dollar index, we were hoping, I know I was hoping yesterday for really this 786 to be tested. Stopped shy, and we broke that downtrend line. Okay. That was holding the dollar back. So now, where does the dollar find good resistance? Probably right there. Um, Dollar's hard to read right now. It's difficult. Like I'm looking at it going, it's tough to read. So 96, we're at 95 and a quarter. So 96, that's 50% retracement. Um, so I don't know if that's really good resistance today. I just know that's going to be really good resistance in the next couple of days. Like if we get a strong retail sales number, you know, I could see that. I'm going to write down 96, although I don't think it's the best resistance today. I think it's the clearest I can see. Um, so on a dip, I mean, 94.85 is probably going to be good support on the way back down. Okay. All right. Let's go take a look at the peso. So the peso stopped at really some good support yesterday and bounced pretty aggressively. Previous resistance, current support, bounced off of there pretty hard. Now that this is interesting because now the peso is now boxed. It's boxed in because this. Let's get rid of this fib real quick. Okay, this trend line is going to cap it. Okay, this will support it. So we're now boxed in here. 1540, 1564. 1540. That's going to be key support. 1564, right? And we were in a very bullish trend, but because of yesterday, it kind of pushed us back into our range environment. I'm more concerned that this peso is doing one of these. You know, we're just we're in an upward sloping range. We're just we'll probably be like range bound. Something like this. Just bouncing around, just driving higher, but bouncing around in a range as we do it. So anyway, um, out of I know Sweden overnight. Um, uh, we had some inflation data come out of Sweden, okay, which pushed the U.S. dollar Swedish krona lower. We pushed right into support too. Look at that. But still, there's nothing here in this chart looks attractive to me for the Swedish krona. Nothing. I mean, we're just on really key support. I mean, it'd be crazy to just start shorting the U.S. dollar Swedish krona right now, regardless of the strong CPI data overnight. Here's the Norwegian krona, and the U.S. dollar Norwegian krona is just bouncing around in a range, but we're pretty mid-range right now. We had a false breakdown, which this right here, as I was saying to you guys yesterday, this right here is a big deal because this false breakdown could lead to a complete and utter reversal next week. So that's something that we need to keep an eye on. God, it's like I almost want to take my profits right now in the euro dollar. I'm up 93, 95 pips right now. What do you guys say? Take a poll. Should I take it or leave it? Take it or leave it? I should probably do the smart thing and take partials, right? Decisions, decisions, decisions. We got some time. That's what I'm going to do, gents and ladies. I'm going to take some profit, moving stops to break even on both the cable and the euro. Do you know why I do that? Because it removes fear and greed. Those are the two driving forces. It's you against the market. Remember, it's not the market against you. It's you against the market. It's you against yourself. Excuse me. That's what it really is. You have to fight your own self when you trade, and your own self has two powerful forces, and it's called greed and fear. So if you can overcome greed and fear, you know you become one. I'm just kidding. It helps you, go about your day. So I've already locked in half size position, 95 pips on the euro, and I did 22 pips on the cable. All right, and by doing that, if you lock in half your profits, you remove the greed factor because now you've locked in some money, and you remove the fear factor because now you're not worried about the loss of your trade because your stops are at break even. Jared says, thanks, Mr. Miyagi. When you remove fear and you remove greed, you become one. And when you can snatch the pebble from my hand, oh, that's Kung Fu. Okay. All right. I think we're done as far as the bias chart goes, but I want to pull up the E-mini futures really quick. Here's the E-mini futures. Let's talk about this. So we got some divergent relative strength as we continue to hit new highs, right? We have are approaching probably key resistance here. We had that inverted head and shoulder pattern yesterday that played out nicely, and then some. We came out of the ascending wedge, and then this market's unstoppable, just bounce right back. So we should have some pretty key resistance at 2113. So let's go to ES, oops, SPX. Resistance 2113, right? Okay, and support now is pretty easy because it's right underneath the overnight lows. It's right here, 2102. We are definitely ranging in the S&P. Okay, let me see if I can take some of your questions ahead of this retail sales number.